Good morning, traders and investors. My name is Roger Scott, and I'm still the senior strategist for Wealth Press. It's Wednesday. It's hump day. It's December 14th. Christmas is around the corner. Now, interestingly enough, I was looking at the shopping chart, and it looks like today, December 14th, is actually the day that people really like go into Christmas shopping mode. So it's like something happens today. People get into the holiday spirits. But December the 14th is the real major day that we have a shift in holiday sales numbers. Just FYI, I thought it would be interesting. I was asking my guys when it happens, and they were sending me a chart yesterday. So I thought that you guys should know that if things get a little slower right now, if people are a little slow to respond, if things are happening a little odd, it's because we're entering a major holiday period. This is the official first day of holiday shopping, if you will. Now, I've got a lot to talk about today. And folks, I hate to say I told you so. I really do, because here's the thing. If I'm right, then this market's going to be softer than I'm expecting. I'd rather be wrong and this market firm up and get us into a bull phase, because we'll have a lot more participants. It'll be a lot more fun. There'll be a lot more action. So I'm not enjoying giving you an analysis and seeing what I'm seeing. I'm not enjoying this at all. But I have to be straight and I have to be honest with you. So please understand. You may be hearing things you don't want to hear. So yesterday we had Fed data. We had the CPI. The CPI actually came out better than expected. Everything confirmed the PPI's number. It was 6% on the low end of the scale, 0.2, better than expected, 7.1. Very similar to what we saw with the PPI. And what did the market do? Well, let me show you what the market did. It's actually very interesting. I want to show you this. And I want to go intraday with you a little bit here. If you look at what the market did, notice the peak. It peaked right here. It opened very similarly to what it did here. This is an intraday chart, so you're looking at 60-minute bars. Look at that resistance right here. It went, it opened, and you know what Wall Street did the entire day? They used it as an opportunity to liquidate. That's all they did. They did not use it as an opportunity to prop up the market. Wall Street used it as an opportunity to liquidate. Matter of fact, I was telling my guys this the other day. We have, yesterday during the day, it was 500, 600 at one point. But my tail gap setup, that's when the market opens at a 10-day high and closes in the bottom 25 percentile, 255 stocks. Now, while I flip back through my history mode, keep an eye on this. It's usually 5, 10, 0, 1, 40 is like a high. It never gets like to 200 to 300 to 400s. So look at this number right here. Just keep your eye on this number. Oops, doesn't want to flip. 4, 8, 9, 1, 2, 15, 1, 28, 0, 3, 5, 3, 2, 3. You get the point. 12, 0, 3. I've just gone back to November 15th. So you could see 19 sometimes, 14 sometimes, 15, 17. It goes up to 40, I think, or 49 over the last like 2 months. But look at it yesterday, 255. So again, 10-day high and then closing near the low, a turnaround like a Gilligan's Island. Speaking of Gilligan's Island, we usually have 0 or maybe 1 every week. We had yesterday, let me show you the reverse Gilligan Island. And that's when we're in a downtrend opening higher. During the day, we had 15 stocks doing this yesterday. Just to see 3 like Lyft, MDT, these are all stocks that are still on my downside list. But the bottom line is, folks, and here's my question for you. The market's now down, and it went up 1,100 points on the Dow pre-open, and now it's negative, and it went negative at one point yesterday. So my question to you is now, what is going to be the catalyst to cause the market to go higher? We already know the Fed is going to raise rates 0.5 basis points today. The bond market, as we will look at right now, the bond market is already lower by 0.39 ticks. It did not take out the swing high. It's overbought right now. It doesn't look like to me, and again, maybe I'm crazy, but it doesn't look like to me like there's any major catalyst to cause the market to go higher. Think about it. We had good news yesterday, really good news. And what did the market do? It didn't do anything. Traders used it as an opportunity to liquidate. Opened at the high, closed near the low. I showed it to you. And the bond market's already lower. So what is going to be the next major catalyst? The jobless claims? I don't think so. Retail sales? Definitely not. Industrial production? I don't think so. I don't think we have a major catalyst to prop the market higher. Meanwhile, volatility yesterday made a 1-month high. And sentiment levels are not increasing. Matter of fact, 81% instead of 90%. Look at the NASDAQ. 55% of stocks trading above the 50-day moving average. And look at the Dow, 83 above the 50-day moving average. Just to show you the graph. We can't sustain this. We can't sustain it. So it huffed and puffed, but it's still below the high. And if you look long term, we're still going down. Folks, I'm telling you, as clear as day. And if yesterday didn't show it to you, I don't know what will. But this is not a market that's gearing up to go up. This is a market that's gearing up to go lower. And you could see right here on the NASDAQ, if you look at a chart here, we'll look at a chart. You could see that we're reaching for the 200-day moving average, and we're already near the lower end of the range. So I'm expecting us to come to the 50-day moving average much, much sooner than later. Now, let's talk about what's on the table today and kind of get into the technicals of what I just discussed. So yesterday, all the major indices, the S&P, the NASDAQ 100, rose to a 3-month high, and the Dow climbed to a 7.5-month high before things cooled off. Now, what's interesting, they didn't stay there. What's interesting is, notice the NASDAQ and the S&P are at a 3-month high, and the Dow's at a 7.5-month high. Well, this disparity is the biggest we've had since 1930. All right, and I don't expect it to last, and I'm expecting the Dow to come back in line with all of these stocks. Labor Department report showed November consumer prices rose 7.1% annualized, as gasoline and used cars prices dropped. At the same time, core inflation, and I'm not really concerned about month to month, but core inflation also fell. The number that I was looking at, the real number I was looking at was core inflation, and core inflation was 6%, which they were expecting 6.1%. It was right on the low end. So if that doesn't cause a market to rally and stay up there, I honestly don't know what will. Today, all eyes are on the Federal Reserve interest rate decision. Mr. Jerome, I'm not going to be honest with you till I get reappointed, and then maybe. Powell speaking. Central bank has raised interest rates by 375 basis points this year, including 4.75 basis point hikes, the fastest rate hike cycle since the 80s. Today, they're expected to deliver a 50 basis point rate hike, and that is well priced into the market. And then he's going to be saying how we're still in this mess, and probably it'll cause the market to go down. My 5 cents. Because all the catalysts are priced in. There's nothing right now to cause the market to go higher. Zero. Yesterday proved it. We sold off and lost all of the gains, and now the market's lower. And there's zero catalysts right now till earnings, and earnings aren't going to be good for the next 2 quarters. In Europe, stocks are down. Investors remain cautious ahead of the U.S. Federal Reserve last scheduled meeting this year. That's happening today. They're waiting to see what happens. So am I. Chinese Shanghai Composite today closed slightly higher. Chinese stocks garnered support after a report showed the government is planning more than $1 trillion support package for the semiconductor industry. That is beautiful. To help local firms counter U.S. restrictions on semiconductor parts. Good. Concerns over rising COVID cases in the country continue to weigh on sentiment, even though they're easing their curbs. Nikkei closed higher. Data revealed that sentiment along the country's largest manufacturers deteriorated in this last quarter. Their industrial production stood at negative 3.2% for the month, weaker than 2.6% expectations, indicated nearly double decline in October. They're losing steam. Outlook for service industry remained optimistic after a COVID boom. I'm really concerned about Japan, and it's a big part of the economy. We may get a little upside from biotech today. Moderna and Merck had a positive announcement, and we have earnings on Lennar Homes. Now, getting into the nitty-gritty, as you can see here, the Dow's already down 31 points. We have not been able to hold the gains we have seen. And if you look at the number of stocks making 20-day highs, we're at 178, 20-day breakouts, 41. Now, this number could go higher, but based on what I saw yesterday, I think we're dead in the water. I'm right now looking at opportunities to the short side, not the upside. And matter of fact, yesterday, We sold my favorite stock, wink, wink. It's not my favorite stock. I can't stand this stock. It's Dish Networks, and I think the price is going to come right back down to the base. This company is an outdated tech company that doesn't really have anything that great to show for what it's been doing in the last 5 years. They're basically going to internet cable modeling. Their whole satellite business model is just out of whack. I think this is a relic from the past, and I think with all of these streaming services and all of these things that we've got going on right now, I just don't see any upside in either this Wall Street. So Dish is definitely a sell. I'm going to show you some stocks that I'm looking at. Now, if we're looking at individual sectors, which we are, I want to show you a few things that are on my target that I'm liking right now. And I don't think the rally in energies is over, but if I were you right now, honestly, I would stay away. I would be a little more cautious, and I would, let me just show you what I would be looking for right now. I would be more inclined with natural gas. I think natural gas, Apache, I like Apache. I like the natural gas exposure right now, and I'm also liking a few energy stocks that have been beaten down quite a bit. But I really like energy and utilities. I like Quanta. I like Apache. I would stay away from traditional energy and start looking more into utilities and natural gas. I think utilities and natural gas will stay higher in the foreseeable future, but I think energy will also rise. But if I were you right now, honestly, my bet would be APA to the upside. I think it's going to hit all the way to about the $50 level. I think we're going to see another run up. For the bears, oh boy, we got a lot of bearish stocks because of the rally that we've seen. Let me show you what I would do if I were you. SIVB Financial, I would sell it right here and wait for it to drop from about 222 to about 197. Or, here, let me show you a couple of other ones that I'm looking at. I wanted to say Dish. I think Dish is going to go down, but you already know that. Here, where's that other one? There was one more. Right here. Boston Properties, I think we're going to go down all the way to the $64 level. I love this downtrend. So BXP for a sell, and SIVB for a sell, and Power Quinta, which is Power PWR, or APA for a long. Now, folks, before I let you go, like I mentioned earlier, we'll have a Fed decision in just a few hours. I'm actually going to be live with Chuck in a class that day, that hour, not day. And I understand if you've been uneasy heading into interest rate announcements, as they tend to be market-moving events. I get it. That's why I've decided to open up my premium VIP room for all to attend today for free. Save the link below and use it to enter the VIP room before noon. I'm going to cover everything you need to know heading into today's Fed decision. We're going to have this class at noon, and the decision is going to be at 2 o'clock. It'll be perfect. I'm going to give you buy levels, sell levels, critical things for the Fed to watch out for, where I think the market will go. What are the most critical stocks? What's the strongest positions, weakest positions, key levels that need to be breaking for us to move higher or lower, volatility analysis, bond market analysis. I'll show you my top setups from recently released trading tools. You do not want to miss out on this. I cannot wait to see you guys there. You don't want to miss out. And the timing. Folks, the timing. We had CPI yesterday. We had the Fed announcement. The markets are moving. I have so much to share with you today at noon. Do not miss out. Follow the link below. It's 100% free. I'm inviting all of you, noon Eastern time. Do not miss out. No matter what, do not miss out. It's going to be a huge, huge event, and I'll see you there at noon Eastern time. Follow the link below, save it, and then enter it at noon with the link that you got below this video. And if you don't know where the link is, Wealth Press YouTube channel. Go to YouTube, type in Wealth Press. It's below this video. Remember, like this video, subscribe to our link, and listen to me. Post some questions for me. I'll answer them for you in real time. And that way everybody can get an understanding. They're all in the YouTube channel. Like that channel, subscribe to it so I can keep making these videos for you. And if you're really liking them, send me an email, support@marketgeeks.com. Have a great hump day. I'll see you on the other side of this Fed announcement. It's going to be messy today. Bye.